Welcome back, everybody. We're going to do our usual technical analysis slash daily recap on gold and Bitcoin from the day that is the 20th of August. So, as you can see on the screen, this is my daily analysis that I made pre-London. Um, and we're seeing a bullish correction of this bearish aggressive move. Um, Almost going to retest these previous highs, this previous price sensitivity area and price point, which was the last lower high that is basically one of the 3 points of this trend line, bearish trend line, of course. Of course, it is Friday, end of the week. We're not expecting that much of a movement, no news, no report. Next week is full of data and report of regarding the United States and dollar. So um, we weren't expecting that many moves. Of course, not expecting below 1772, maybe some scalp above 1789, but not necessarily. 1795 was, of course, out of the games. Was not expected to be today on a Friday. So we were identifying the price was moving in a range, and since we are scalpers, we are not intraday traders. We don't necessarily need big moves to take advantage of. So, better stay on the sidelines if it's nothing not clear, not sure. But what we wanted to see was okay, we can take high risk, high reward buys at these rejections that might be directly here, 1784, maybe below at the 1781 key level, or even if it goes deeper, looking at price sensitivity areas and key levels. We were looking, of course, for double bottoms being created, and something that we identified in the previous daily recaps is that a double bottom doesn't necessarily have to be exactly on the dot, but it can be that it dips slightly below and then continuation break retest up of the price sensitivity area slash the key level. So that's what we wanted to see to take the buys, since the main bias is bullish, as you can see here. Um, we prefer to take buys. We can only take sells, realistic sells, safe sells at huge rejections of the key levels, 1789, or below 1781, 1777, 1772.5. So let's start. Let's go on our chart. Okay, there you go. As usual, we're going to do our daily analysis without any price point. But let me just, okay, you should be fine. Okay, so we're coming from the Asian session that, as I told you, we were in a bullish trend, so, creating higher lows and higher highs, coming to pre-London with a double bottom, a retest of this previous sensitivity area, nothing special, no big volume, no, nothing that we can are so particularly concerned. But we see now in the start, this is the start of the Eurozone session at 8 a.m. my time, 2 a.m. Eastern time. And you see already some volume coming in, price that is brought to a new high. But what happens at these highs, which happen to be 1789-ish, which was the key level, we start to see one, two, three, and four. This is the big one, the main one, the one that determines the next action. This is the last attempt to make a new high, failing to make a new high. So as you already know, failure to make new higher high. That brings a rejection, as we saw in many other occasions. So let me just chart here these moves. Nothing special, nothing to take advantage of. You see, it's not much of a clear of a trend, but we are now bouncing against these previous highs and huge price sensitivity area until we see a big drop below the previous lows and failure to make new highs. This is okay, an attempt, but we see that this is the key point where price fails to make and gets a big rejection. Okay, guys, give me a second. Okay, I'm back. Sorry, everybody. So as I was saying, this is the last point, last attempt with a huge rejection. But you can, if you start seeing that is what I'm trying to do, trying to sort of identify this point as soon as possible. You can enter here with a very small stop loss, like you put it above here, 5, 6, 7 pips, and you have a huge what happened here? New huge risk to reward ratio. And from here you see big rejection, breaking below, reacting here at this previous price sensitivity area, but break, retest, and continuation down here to make a new low. Now we are at 1781, which we know is from the previous videos. We are break and retest. Okay, so that from the previous videos we saw that is a very big price sensitivity area, is a key level more or less. And this, when I actually posted on Instagram, when I saw this move and I saw exhaustion from the buyers, I called the double bottom. Of course I called it like this. Maybe it was until here, but this was something expected. If you go and check here, look for double bottoms being created, price even dipping below the price point, but then showing extrusion and with volume and a clean price action, you see a break and retest of the price sensitivity area slash key level. So we are here, we are 1781, and here. So we saw reaction, we saw that there's no clear bias in control, no much selling control. It is a sort of starting to see that buyers are not jumping back in immediately. You see a dip below, but then you see a break, retest, and then exactly what I was looking for, jump price, high risk high reward buys here, retest of these previous highs, and then printing of higher highs and higher lows in a trend for like 50, 60 pips. Very nice move. It was double bottom at key level. Just identified with B and R above key level. Okay, as simple as that. I sky reward, and this is safer. Okay. Of course, now we can see that price is reacting strongly on the left. There's this mass, this price sensitivity area, very big, that is not giving, is not a break and retest above this level, which is clean. But there's a lot of there are a lot of price points on the left that can create, we can say, they can interfere. Then you start ranging, you see a pullback, you see now another sort of double bottom where exactly at these previous highs. And then you see price going back up. This is New York volume coming in. You see a very, very aggressive move on the downside and then an equally aggressive move on the upside. We are still reacting at these lows. And that's why in a situation of ranging, because we are ranging and we identified beforehand, if you remember the analysis, let me show it in a second. Of course, very good. Price is moving in a higher time frame range. Scalps, 30, 20, 30 pips are possible, but don't expect clear cut move, clear direction. Don't expect it because it's a Friday, and we're not expecting news for now. So this kind of very aggressive move, especially at not even, this is New York, not even New York Stock Exchange open, can happen. You see here a big reaction, very aggressive. This could be, there's no retest, but this could be the same idea. You see exhaustion, you see break and retest, break, retest, this can be in it. But then you see a reaction here. This is just a big range. This is a barcode. Of course, you can say, yeah, below 1781, you take sells. At the end of the day, it's like 30 pips, but it's not worth it. When every candle is up, down, it's not worth it. You see again, price moving up, reacting on the dot at the key level. This is a very clear action. And then you see that it starts making higher highs and higher lows for a quick scalp on the upside, which, as you can see, it reacts where exactly on the same price sensitivity area that was expected during the day. And from here, you can see sort of, okay, we try again to make a new high. This is the fuck you candle. You can see it is very clear. Maybe not sure, not certain to trade, but it's very clear in the insight. You see a new high, higher high being created. You see attempt to create it and see a small little bullish candle, maybe a candle or a week, maybe just a week, and then immediately corrected by sellers. This is very, very clear to see in Insight. Live during trading, it's very, very difficult to call it, but it's indeed a setup that you can consider trading if you backtest it enough. And then, since then, we are starting ranging because it's Friday. There you go. And we are at 1781. So this is it. So we're coming from an Asian uptrend, very slow, very nothing special. Okay. We have this price reaction, we make new higher lows, higher highs, but at this price sensitivity area, which is a big important, is 1781, we see 1, 2, 3, 4, 1, 2, 3 attempts to break above, failing. We see a deeper pullback. This you can say in during the live, of course you can see, okay, we broke below, we retested it, then we're going to sell. Might be, but this is not a price sensitivity area. So look on the left, how much the price points are creating a mess, can interfere with your action. So that's why that is the reason why this is a very high risk reward. Sell if you identify it. Otherwise, there's a clear break and retest below this previous low that gives you a much safer scalp on downside. And this is like 1784 to 1781. It's still um, 30 pips. Exactly what I was telling you about during the pre-London analysis. Then we identified, told you, we identified this possible double bottom when we were here. We knew what to look for. We knew that the price was going to dip below and then break and retest, and then we had like 50, 70 pips scalps on the upside, very aggressive rejections, and then barcoding. This might have been one setup, very maybe not the easiest to trade live, because what tell you that price is not getting rejected at this. It reacted here. Okay, now why should be going above again. So that's very difficult, but it's indeed something that with experience, I think is possible to get. Okay, have a very clean break and retest reaction. Okay, and then some ranging, some fuck you candle. And this is it for gold today. So I hope you enjoyed, guys. See you next time.